Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Thursday, the 9th of June. Starting off with Armadale Capital, and we've got a gap, bear trap gap reversal here, close above the 50-day moving average at 2.37. So that means we can upgrade the previous 3 pence zone target. Probably looking as high now as 4.5 pence, which is the top of this falling trend channel from November, only back below the 20-day moving average, 1.92 pence, and below that initial 2.06 may support. We even begin to delay the upside scenario and a rather swift move initially, obviously, to the 200-day moving average at 3.5 pence, but 4.5 pence. The big target there over the next couple of months. Next up, a stock which looked at a couple of times here, Harvest Minerals. Looks like there's a decent extended base here above the 4 pence level, at and above the 4 pence level. That was previously resistance in March and April. Triple bounce off this uptrend line in the RSI window from March, and a clearance of the 50-day moving average at 5.02 pence. While above the 10-day moving average at 4.66 pence, we're looking for a pretty swift move towards the 7 to 8 pence zone, which would retest April resistance. Big target here as high as 9 pence over the next 2 to 3 months. Only back below 4 pence, obviously, questioning the bull argument there. Minoan is next, and worth a comment here just on the basis that we've had this triple support here at and just below 7 pence. That was also a bear trap rebound from the from below the late March 7.1 pence level. And the view at the moment is that while there's no breakback below the floor of this rising trend channel from last year at 7 pence, we're heading as high as a retest of 14 pence over the next 2 to 3 months. Obviously the initial target there at 10 pence plus from April, and that could be hit as soon as the end of this month. Next contender is Mobile Streams. Not an obvious rebound candidate, but worth just having a look here on the basis that this has bounced off a falling trend line from the beginning of the year, and that could take the shares back up towards the 200-day moving average at 7.56 once again, especially while we remain above the 4 pence level. That's a bear trap rebound as well from below the 3.95 pence low of May. Moving on to the next stock, which is one of yesterday's biggest rises, Oilex. And here got the clearance of the 50-day moving average with a gap left through from the through the 20-day moving average as well at 0.44 pence. That's what I call a rocket launcher reversal. Also a bear trap rebound from below the 0.46 pence April low. So we should expect decent follow through on this move. Initial target, obviously, the 200-day moving average at 0.83 pence, that which we failed at in April. But the big target here over the next 2 to 3 months as high as 2.3 or 2.4 pence. And that brought into picture because of that gap through the 20-day moving average, 50-day moving average rather. Saw a similar type of thing in January, and that led to that spike to 1.5 pence. So this stock does have form in terms of the setup. Finishing off with the stock that I forgot to actually talk about yesterday, it was Pennant International. Bull flag, V-shaped bull flag resting on the 200-day moving average after a big gap there through the 40 pence level. That should have plenty of decent upside there. Stop loss on this at 44 pence, which is the top of the gap and also the area of the 10-day moving average. And the target here as high as 80 pence over the next couple of months. Be cautious on the shares, maybe wait on an end-of-day close above the 60 pence level. Any dips towards the 50 pence level or the upper 40s regarded as a buying opportunity, as that would cool off the oversold, rather overbought RSI number that we have at the moment above the 70 out of 100 level. That's it for me. More updates at the same time tomorrow.